All right, Patrick, let's dive into the show. I want to start with this amazing quote that you had, which is a real estate boom cycle hides investor mistakes. Slump cycles are when they pay for them. And let me tell you, there's a lot of them paying for their mistakes right now, Patrick. I recently, just this morning, actually, a few hours ago, I did a speaking engagement for a group of realtors, fantastic group of realtors. But it's incredible how some people are really, really struggling out there. And that is because the real estate cycle, the boom cycle they just came out of, and we've been out of it now for a while, but that was like, as they say, a high tide buoys all boats. That's what the real estate cycle is like, and we're not there anymore. If you're not on your A game, you are getting pounded by the real estate market right now, and a lot of people are feeling that pain, unfortunately.
Something is boom cycles are that case, aren't they? We've talked about this time and again, so the Real Estate Investment Network, 30 years later, we've talked about cycles, boom, recovery, or boom, slump, recovery cycles. And it's in the boom cycles that are driven by emotion. Investors, people in general, are just not paying attention to what a boom cycle represents, which is a lot of hype, a lot of emotion. And think about it was only 2 years ago, really, maybe a little more, we'll say 3 years ago, that boom cycle was happening. And you could see the hype, the emotion, chasing deals, lining up, multiple offers, a million over this and a million under that. I mean, it was crazy. And now what's happening? We're into the slump cycle and people are paying the price, sadly.
Patrick, you're absolutely right. And it was 2 years ago. It was no more than 2 years ago for sure. We're definitely at the peak. I sold a building, I believe it was February 2023. And it ended up closing March 10th of 2023. And that was like literally we nailed the peak. It was February that was the peak at that time. But what I want to talk about is this, and that's where we're going to get this conversation to go, is what real estate investors and homeowners and anyone who's interested in real estate, what they need to understand is that the current cycle forms the next part of the cycle. So when you're in the boom, that is setting up the slump. And in the slump, it is setting up recovery. And in recovery, you're setting up the boom. So the moves you make in the current cycle are the important things to do for what's coming in the next cycle. And that's why right now there's so many tactics. And I was speaking to this group of realtors this morning, and I was showing them how there are certain tactics right now that couldn't have worked 2 years ago. They did not work well 2 years ago, but they work extremely well right now because of where we're at in the cycle. So as you and I have often said, and it's certainly not a quote we created, but it's a quote that you and I use all the time, which is there really is no bad real estate market, but there is the wrong tactic at the wrong time in the wrong real estate market. And that's what's happening to a lot of people right now. And I'm saying this because I want to set up what's coming down the line, Patrick. And you and I have talked about it for some time. There is a housing shortage. Now, people can't believe it. And it's funny how short people's memories are, but like it was only 12 months ago, we were talking about all the housing problems we had and how there wasn't enough, and so many things. And we have been setting ourselves up for a huge housing shortage into the future because we're not building nearly enough, Patrick. And that, again, is what I mean, how the current cycle sets up the next cycle. So because we just came out of a boom and things were crazy, interest rates went through the roof because of it. As a result of that, building permits fell off a cliff. Now nobody wants to build, and that is setting up the very next boom, or the next recovery, I should say, which is coming next. So it's fascinating how when you know how the cycle works, you could see it coming and you can anticipate it.
Well, okay, so let's expand on that a little bit. First off, you talked about it just briefly, when you said you sold a building just a couple of years ago, it was at the top of the market. But let's be really specific. That's in Ontario, and that was wherever your building was, Peterborough or wherever
Peterborough.
it was, right? So I sold about 5 months ago now. I sold detached in Edmonton. I got multiple offers. It sold literally in 48 hours. And by the way, my realtor friend just sent me the the notice where they're knocking that building down. They turned it into an infill and they're putting an 8-plex in that particular property. So it's all to say this is that the cycles are not right across Canada. And the frustrating part that I see, and you and I, because within the Real Estate Investment Network, our job is looking into the future. We're not as much as we get into the emotion of what's happening and get pissed off because of these silly policies that our government continues to put in, whether it be municipal or federal or whatever it is, these ridiculous policies are being reactive with what's happening today. They literally, I don't know that they know how to spell real estate, let alone look into the future to say the decisions that they're making are going to unfold, and it's not going to be a pleasant experience for those who want to own a home. So this is part of the issue that we deal with, is that we're looking into the future, and most, even economists, JG, they're not looking really into the future. They're supplying data of what's happening this month, last month, next month, but they're not really saying, okay, let's look into the future, a year, 2 years, 3 years. And it's hard to do, by the way. I'm not saying that, but you have to continue to try and keep looking into the future so you can make really great decisions. And that's the fundamental difference between the message we're trying to get out here versus a lot of what we're seeing in the data or the talking heads that are on, like us, on YouTube.
Well, Patrick, I'm glad you said that, because, and we're going to talk next about the Great Carney Housing Plan, or the Build Canada Homes, or whatever the hell they're calling it. We'll talk about that next. So I really want to dig into that. So stand by for that, ladies and gentlemen. But what I will say this, Patrick, is you said the magic thing there, right there, which is looking into the future but understanding your timeline. I was talking to an investor yesterday, went to visit his property. We were doing like a site planning consultation for him, where we're showing him how to maximize the use of that building. In terms of, do you do a single family? Do you do a single family with a suite? Do you put a coach home? Do you do a duplex addition? Do you tear it down and build an eightplex? I mean, there's all the various options, right? So that's part of what we do at Visture, is we analyze that for our clients. My point is that, right up front, he says to me, listen, I got a 10 to 15 year timeline. Perfect. That is a really great timeline. Number one, knowing your timeline is so important, Patrick, because what we're going to do with a property in the 10 to 15 year timeline is very different than what we should do to a property with a 2 year timeline, or so on and so forth. And that, when you say look into the future, I think it's important for people to realize their timeline and to ask themselves their question. The question of themselves is, what is my timeline? And, you and I have talked about it many times, where really, even 5 years in real estate is not enough of a timeline. You really want to give yourself 8 years, 10 years, 15 years, 20 years. Now you're talking. And I wanted to just share that, because you said the words look into the future, and I think that's important. So the question is as we transition and good old-fashioned Mark Carney looks into the future, what do you think? What is he babbling on about now? Because they're promising, I believe, is it 500,000 new homes per year? As you can see from the current graph you have right now on your screen, we're not heading nowhere near that. In fact, we're trending way down from where we were. We've never even hit close to 480,000 or 500,000 homes per year. What's his big plan here, Patrick? Let's get into it.
So JG, CMHC says we need 480,000 homes per year, and that's their magic number. Carney, he says we got this. And then Canada doesn't have a housing plan. It obviously has a housing problem, and Build Canada Homes is going to prove it. And we're underbuilding where we need homes and overbuilding where demand is soft. Are you confused? I am. And guess what? So is the market.
As if that wasn't confusing enough, Patrick, investors are watching as purpose-built rentals are flooding the market. And then at the very same time, national housing starts are collapsing. We're going to cut through that noise. The Toronto condo dream that once was for so many has now turned into a nightmare. And both Toronto and Vancouver, their city operating budgets are getting absolutely crushed. And we're not seeing any headlines about this yet, but it's coming soon, let me tell you.
Let's talk about it. Let's rein it in. Hey there, we release this show every second Friday of the month, so be sure to subscribe to get the latest economic data and analysis, but most importantly, what it means for you as an investor, as a business owner, as a homeowner, or in Canada, a hope-to-be homeowner. And be sure to like, share, and comment. We want to hear from you to stay connected.
The question is as we transition and good old-fashioned Mark Carney looks into the future, what do you think? What is he babbling on about now? Because they're promising, I believe, is it 500,000 new homes per year? As you can see from the current graph you have right now on your screen, we're not heading nowhere near that. In fact, we're trending way down from where we were. We've never even hit close to 480,000 or 500,000 homes per year. What's his big plan here, Patrick? Let's get into it.
Well, something I don't think what he calls a big plan. I mean, they're talking about hitting 4,000 homes. I mean, it's so ridiculous. What I really came to realize recently is that, government initiatives are kind of like home renos. You know how we joke that home renos, they're always going to cost you twice as much and take 3 times as long, some version of that. But in classic government form, it's going to take, 6 times as long and, cost you 10 times as much. They're going to 10x whatever that saying is. That's just the way of the government. So the Build Canada program is about 13, I think there's all sorts of numbers out there, it's like 13 billion up front, and then in the future it's going to be 25 billion. They're building what is supposed to be affordable housing. What people need to understand is hear that as rental affordability, rental units, even ADUs, like the quality of property that they're saying that they're going to build isn't even there. So number one, 13 billion sounds like a lot of money, but they're only talking about 4,000 homes in 6 cities. So we're not even. So I don't know what they're beating this drum about. If you work out the cost, 13 billion on about 4,000, I think it's whatever it is, $2.3 million a home, which goes back to what I said. It's going to cost you 10 times as much. So the CMHC data shows that housing starts are flat in Toronto. It's the lowest since 1996. Yet this plan doesn't really add anything. What it does, however, brilliantly as government does, it is a huge bureaucracy expansion. It's going to create another federal agency. It's not going to streamline approvals. It's risk of even slower housing delivery just because of the administration. Think about the layers, JG. And this, you're a developer. Think about the layers of bureaucracy and the duplication of all things real estate when it comes to government. And it really boils down to, in my world, it's always the same case of it's politics, not policy. It's optics, not output. So the announcement that he just made, framed this whole campaign as something amazing. And, but as I'm listening to him, it's like he's got this little checkbox that he's checking off, right? And then on top of it, sorry to rant on this. This is just so pisses me off. So now he's talking about using federal land. So by the way, there's federal land, provincial land, municipal land. They're talking about using federal land. And by the way, there's very little public land, as I've dug into this, there's very little federal public land that is even close to making sense in terms of where you would build from an infrastructure point of view, and even how close you are to a major city, for example. So there's so many things that just kind of go against what he's saying that it almost is nonsensical. So I'll leave it at that and let you cut in there.
Well, I think there's a couple different elements to it. I just my thoughts on it is this is the thing that the thing that kind of drives me crazy, albeit I understand it. It's a liberal platform. So I'm not going to get what I want because the liberals don't have the same beliefs as I have. So like, let's separate those two things. But the fact that a government thinks they can create new agencies, more regulation, and more red tape to solve a problem that is already caused by regulation, red tape, and bureaucracy is just laughable. So it's like the way to solve this is to remove regulation, to remove red tape, and to make it easier for us to build and to make it more profitable for builders to build. But instead of doing that, they're doing the exact opposite. So I have absolutely zero hope in this working whatsoever. And there is no way. And I love his. I read in one of the headlines, that Mark Carney said. I believe it was something along the lines of like, we're going to solve this problem. We're going to make it our business to build homes. And I'm thinking, you're the federal government. This isn't your business. What are you doing? Like, this isn't your, but it is, the fact is, Patrick, is you're 100% right. This is policy. This is about the optics. This isn't about the actual policy and making something that works. He promised housing. So he's going to spend a whole lot of money, taxpayer money, wasting taxpayer money to try to fulfill on a promise that he absolutely cannot keep, and this will yield a big fat nothing burger. Those are my
Yeah,
thoughts.
it's they're not going to pull it off. They'll screw it up. I mean, this was an extension of, I believe, the Trudeau initiative. So they've already been at it 6 or 8 months or more, and they still haven't got it handled. So that's just kind of how things are going to roll. So it's a lot about headlines right now. It's a lot about posturing, and at the end of the day, this is not going to do anything to solve our housing problem. And the other thing that we shouldn't step over, JG, is, let's face it, the federal initiatives don't necessarily align with the provincial and regional initiatives. So there's sticky spots all over the place. And, 4,000 homes is, let's face it, it's laughable.
And so I guess at the end of the day, Patrick, I think people listening and watching and they're asking themselves, JG, Patrick, you see a future with a housing shortage in it. Is this going to solve that? And the answer is no, not from my perspective. This housing plan will not solve any future housing shortage. And we're definitely still on track for that, because this is just going to add layers of bureaucracy. And in fact, the very fact that we have some of the lowest building permits. I know builders here in town in Peterborough, where I operate. They used to build 50, 60, 100 homes, 200 homes a year, 300 homes a year. You know how many building permits they pulled this year? 8 building permits. That's it, because they can't pencil the deal. They can't make it work. The development charges in Peterborough have gone up 400%. Oh, I wonder why we're not pulling any permits anymore. Oh, I wonder. That is the cause of this. And this is just going to make it worse for people, unfortunately.
It is. So let's unpack this a little bit deeper. Let's go to the one thing that we kind of talked about was what's happening in terms of city, provincial, and municipal challenges. Toronto, Vancouver are the big ones, but they're all going to go through this. And that is the fundamental. Toronto, Vancouver, specifically, to your point, Ontario in general has these crazy, whether it be transfer taxes, zoning fees, what am I thinking about? Zoning, taxes,
development charges.
So think about that for a second. Think about how much money goes to the government, municipal, provincial coffers, federal as well, on even a 800 unit condo tower in Toronto or a bigger development in the suburbs. That's all stopped. It's frozen. So where's that money going to come from, JG?
It's big dollars. It's huge dollars, huge. Patrick.
Billions and billions of dollars. Yeah. To your point, I just want to shine a light. You think about it. You know Peterborough like the back of your hand. So think about it. If you're not pulling permits, or there's very few permits being pulled, where's the money coming? So aside from the fact you're not building anything, so okay, that would lead to some form of a shortage. Where are they getting the money from that's going to pay the infrastructure?
Let's look at that one example, just so people can wrap their minds around the numbers. Just that one builder that is a top of mind for me right now that I believe has always built about 200 homes a year. He's built 8 this year, right? So at 200 homes, the average development charge in Peterborough is $70,000 per home. 200 homes times $70,000 is $14 million of development charges that he's not generating for the city this year. So that's 200 new homes that aren't getting built. That's jobs and GDP and all of the buying around 200 homes. Plus and by the way, the city makes taxes on all that stuff. And then there's 14 just the straight up development charges of $14 million they're not making. So you're 100% right, Patrick. This will get way more serious for them. And hopefully one day they can do layoffs, and then they'll get their head out of their ass and say, oh, maybe we should do something about this.
So the first off is that, everybody's hoping that the government's going to solve this housing problem. They're not. It's going to go through the cycle that it goes through. Different regions are going to be at the effect of it differently. So what's Alberta going through right now continues to be a slowdown, Calgary being way ahead of Edmonton, but even Edmonton's getting softer. We were at the real estate investor conference in Edmonton a week ago or so right now. And ultimately, you start to see the investors coming in. They're still excited about what's going on, but we see where Edmonton is going as an example, surrounding area. But Alberta is not going to feel near the pain that Ontario is feeling right now and will inevitably get worse. Here's some of the challenges, JG, is how confusing is this freaking market? We've got an overbuild, a potential overbuild in purpose-built rentals. We've got an absolute overbuild in the condo market. And I don't care really where you go in Canada, but Toronto's in a huge meltdown. That continues to be the case, as does Vancouver. I think right now, by the way, in Toronto, I want to say the most recent data, and I might be off on this, is 60 months. So 5 years of supply based on sales of condos. So, 23,000 units that have come online for sale. Anyways, so we got purpose built, then we got condos that are going to be rentable. Then we got the government. Oh, they're going to build 4,000 rentals. Anyways, that's just sick. Anyways, and so then we look at it and say, well, okay, but let's unpack this a little bit more. They're not building single family detached, which is what people want to live in. And it's because the numbers don't work. So developers have done what? They're taking advantage of CMHC, MLI Select. They're building purpose built because that's where they can make deals pencil. That's where they can have some cash flow given rents and all the things that are happening in the world. But the spike in multifamily, like purpose built, is off the charts. And then we add to that. So will it be off the charts forever? No, but there's going to be lag. So there's going to be some real discomfort in some regions for those developers who are playing the multifamily game. So I'm pointing that out to everybody. And I'm not saying it's a doom and gloom scenario. I'm saying that in the next couple of years, it's going to take a while for absorption of all those units coming online. So if you're in the multifamily space, you better be paying attention to what you're producing for a product, how competitive you're being in terms of your maintenance and the look of your units, because you're going to be competing against a lot of new units. And so be very conservative. That's the warning.
Patrick, right here, you can see on the chart that I'm putting on the screen here, you can see where CMHC came out with their policies, right? Right here, it was like the 2022, 2023, when purpose-built rentals were starting to trade sideways. They came out with their policies, and then bam, it's just like literal vertical straight up. And at the end of the day, what investors, and hopefully if you're watching this show, you're either are an investor, you're curious about investing, I don't know, but if as just like from a super high level perspective, Patrick, these three, condos, rentals, and single family, let's call these asset classes, just for sake of easy math, easy argument. What do you want to invest in? An asset class where the supply is going through the roof and there's going to be a ton more into the future, or an asset class that is significantly underproduced? And, the odds are is its value will hold up a whole lot better because it has been so underproduced. And that's the single family asset class.
So when we look at though, JG, when we consider, like when you do the analysis and you look at the purpose built that is coming online, and, will demand, be there given immigration is softening and all the rest of it. So there's going to be a time where there's just going to take a lot. Where's the absorption going to come from if immigration is down and we've got this seemingly overbuild scenario in some regions? And so especially in the major cities, like whatever major city across Canada you've got, short of maybe what's going on in Quebec, because that's a whole different culture and view of rentals. But my point is that when you look at the overbuild scenario that's potentially there, and then the lack of affordability, there is one thing that we've talked about in the past I want to shine a light on again, which is those who cannot afford a home will need a place to live. And so what are they going to move into? They're going to, of course, have to rent. And that ultimately is going to be it. And the affordability issue that people are kind of tripping up or bumping up against is in that single family detached, maybe semi-detached units, which are not being built. So what we want for housing isn't even being built. And so MLI Select program, by the way, when it kicked off, it was the right program. It did exactly what we needed it to do, was to get rental supply on the market, because as you recall, it was really thin. Now, having said that, like all government policies, all government initiatives, They, they stop. What is it? What's the phrase? They go too long and stop too
Yeah,
short. I don't know.
yeah, exactly. Too little too soon and too much too late.
Yeah, 100%. And so this is the direction things are going. And oh, by the way, they're tweaking the program again, I'm told. No announcement's been made. They're tweaking the program again to make it more accessible by small developers, because they swung to the other side. You were talking about it, I think, as well, as like, what are the fees and how much more difficult. They're talking about tweaking it again to bring it back, which is you're going to have you as a developer, where are you going to put your money? I mean, you're doing ADUs and you're doing a whole different model for the most part. But for those who are building multifamily, I mean, you're playing an interesting game. You better know the market that you're building in. That's kind of the warning there.
Yeah, it's definitely a fascinating time for sure, Patrick. And yeah, I mean, at the end of the day, it's been fascinating to watch, because their policies and how they handle it, especially compared to the open market. That's the thing, is that when you engage CMHC, you're essentially buying an insurance on the open market. And as a result, you can manipulate the open market rates, if you will. And that's what makes these deals penciled. You get 40-year amortization, you get up to 50-year amortization. So you're willing to pay a bit more of a hefty interest rate if you can amortize it over 50 years. But Patrick, it's interesting, because it is a manipulation of the open market in a sense. It is a government insurance that is manipulating the actual open market. And I mean, my fundamental belief is that if you let the open market do its work, typically it balances itself out pretty darn good. When you start messing around with it, that's typically when you get hurt. That's what I've noticed over the last 20 years.
Well, and again, I mean, this isn't, at the end of the day, the government is always going to do what the government does, which is, what do I have to do to get votes? What do I have to do to engage people? Because they want an answer today. So I'll tell them what the answers are.
All right, Patrick, I think we should transfer the conversation now into some real economic data. Let's talk employment and unemployment. Where do you want to start? Because the numbers are shifting. The numbers are changing, especially obviously in Ontario. You've called it, and also in Alberta too. I mean, they're shifting all over the place.
Yeah, and Alberta's a little bit of a challenge when you look into the numbers, because the employment is actually quite strong. The unemployment, however, is quite high, which is only to say that, there's a lot of people moving into that province, and so the absorption, in other words, people are moving in. There's just not enough jobs to go around right now, so it's going to take some time. So as much as the unemployment rate has ticked up, it's certainly in certain sectors, if you will, but more importantly, or the bigger kind of point to make here, is that it's primarily driven by the fact that immigration is so high into that province. And so it takes a while, it takes longer to get a job. There's not enough jobs right now to go around. So these are all things that kind of skew the numbers. But if you're an investor in Alberta and you're thinking, oh gosh, unemployment's going up, yeah, you got to pay attention to it. You always do. But in the case of Alberta, you're also considering the fact that there's just a lot of people moving into the province and not enough jobs to go around right now. The actual employment is quite strong.
Interesting, Patrick. And you and I have talked about this before, but it's worth mentioning again. We prefer, as investors and as analysts, we prefer the employment numbers, not the unemployment numbers. But we do share, unfortunately, we do share the unemployment numbers frequently, because that's what's readily available. But we do prefer, you and I, when we're digging into a real region and like digging into a region we're investing in, we prefer what's the actual employment.
Yeah, and there's certainly, the divergence across the country these days is so high. When you look at what's going on in Ontario, it's a tough market in Ontario right now. And as much as, construction hasn't come down as far as I thought it would by now, it will continue to erode. Toronto, they're saying it's like 9%, 9.5%, but those who are on the streets are going, no, it's well over 10% of unemployment in Toronto proper. I don't know if you happen to know what's going on in Peterborough. I'm just curious, because that's your own location, JG. Do you know what unemployment is?
I don't know. I don't know the exact number, Patrick. I know that it hasn't had a material impact on us. Peterborough has a lot of public jobs, a lot of colleges, a lot of universities, we have a huge regional health center here. So a lot of that stuff, and they haven't really been impacted or affected. And in fact, Even though some Peterborough construction is down, other parts of Peterborough construction, interestingly enough, purpose-built rentals is way up. So a lot of people are still employed. Right?
Okay, that will last until it doesn't last anymore. That because it's just a funny way of what's happening economically and in the construction industry overall. But we digress. Pay attention to those numbers, though. That's for sure.
But in Ontario, Windsor is the highest right now in terms of unemployment rate, 11.1%, and that's up from like 8.5%, 9%, so to speak. So no doubt, it's moving in the wrong direction. I think Windsor, because of the auto industry, same with Oshawa. It's funny, the two auto sectors, Windsor and Oshawa, are both up significantly, which isn't surprising, Patrick.
Okay, but yeah, it's not surprising. But what's going to happen and what is happening? Let's blame Trump and the tariffs. That absolutely drives me crazy. It's like this didn't happen over the past few months of tariffs. This all started 10 years ago when we shifted to a liberal government. And yeah, I trash talk the liberal government because they deserve it. They don't do anything. Carney, I gave him a break, and he's just a Trudeau on steroids. Like, he's just an older version.
I was just about to bring this up, Patrick, because Carney recently revealed, and I noticed you didn't put it into the slides, but I was going to bring it up anyways. So what do you think of his 5-point, what did he call it, special projects plan? His 5-point plan to get Canada exporting more. I mean, he's saying the right things, isn't he? I mean, are you like, listen, I'm not a Carney fan, but I know you were giving him a chance for a bit. So his number one priority is LNG, Patrick. I mean, it's got to win some points with Patrick Francie, doesn't it?
No, because it's all bullshit. And then on top of it, listen, if his first priority is to get us a budget, and he's kicking the can down the road again. It was supposed to be released October, then it's now apparently November, and my guess is we're not going to see a budget this year. So imagine you running your household, or anybody running their household, without understanding the budget and not caring whether they go so deeply into debt and deficit to accommodate their living conditions. It's infuriating that we have to put up with this shit. And I just get so fired up about it because, for people who are just working hard, maybe trying to get a business off the ground, trying to stay ahead of the cost of living, we're dealing with a government that doesn't know the right hand from the left, who adds more bureaucracy, more jobs. Oh, they'll argue right now, yeah, but we've been cutting jobs. And they have, but it's inconsequential to the actual volume of bureaucracy that they've created. So these are all things that the government is actually, in my world, the government's what's in the way of even the economy of driving in a Canadian economy. They're just keep getting in the way. And I mean, if I wanted to put on my conspiracy hat, I would say it's intentional, but I won't put on that hat. But it could be set up that way easily.
I want to see tinfoil hat Patrick. That's who I want to talk to. I want to talk to tinfoil hat Patrick.
No, we don't need more tinfoil hats, anybody. We got enough of it out there. But when you start to look at what's going on, even with CMHC, housing, what they're building, what they're focusing on, it goes back to, the phrase, you will own nothing and be happy. It's literally seemingly unfolding that way, given what they're building. I mean, it just seems that way. And I don't want to go down that path. I'm not really interested in it because there's nothing to verify that. We can only watch how it plays out. But ultimately, it is so nonsensical and frustrating to see what's happening. You've got a chart up. I think you're going to show a chart of where employment is and isn't.
This is what I wanted. What I want to talk about is for the last couple months, because now listen, we can have. I'm just going to tell you what the headlines are saying. Because of the tariffs, it has pulled a bunch of demand forward. So the last couple of quarters haven't been as bad as people anticipated, specifically economists. And as a result, they haven't been cutting interest rates at the Bank of Canada. Now, tomorrow, they're going to announce they're going to announce their decision, their interest rate decision. We don't know. This show is going to air after that, Patrick. But it seems like the data is starting to come out pretty crystal clear now. The employment fell 33,000 jobs. you could see some pretty massive declines other than public administration and arts and rec, which is like, I'm still so confused by that one. But definitely we're getting some job declines now in the right, like the data is becoming much clearer. So I think, are we all leaning towards a cut here tomorrow or what?
Yeah, I think they're. Yeah, I mean, I think they'd be remiss, which is kind of what they are anyways, not to cut. I think we'll see a quarter point. I mean, the odds are, the betting odds and whatever casino you happen to follow is that they're going to make cuts. The Fed in the U.S. is making cuts. They're talking about a half a point. 50 basis points. We're talking about a quarter. I don't think we would do 50 basis points, but you never know. The data of
That's my prediction. My prediction is that, and you're gonna be able to tell that I'm full of baloney right now, because I'm gonna say that the Bank of Canada is gonna be smart enough, Patrick, smart enough to get ahead of this downturn, and they're gonna cut half a point right now in order to get ahead of it. Because if they only do a quarter point, it's not going to be enough. It's not going to make a big enough difference. Half a point, though, they might be able to just get ahead of the downturn a little bit. They are that smart. What do you think?
Well, I think that you probably have a strong argument for 50 basis points, and I wouldn't kind of push back against that. It's a possibility. I think they're going to be more conservative because they have got inflation in their world under control. Now, that doesn't mean our food costs are coming down. It definitely doesn't mean our fuel costs are coming down. So our actual cost of living, where we spend money to exist in this world, is not getting less expensive. So there's a couple things around that they're going to be very fearful of inflation, but at some point they're going to say, something, we are either going to crash this economy or we're going to put up with inflation, which means that and we've talked about it for the past couple of years. I still see a strong argument for stagflation, where you have rising costs and high unemployment, that kind of stagflation scenario. I think we're very much at risk of that. So cutting rates, go outside of housing, JG. You're a business owner outside of real estate, and as am I. So when we look at the accessibility to capital as a business owner, although private business doesn't seem to be a thing in Canada when you really look at the numbers, the point is that when they bring rates down, businesses will then feel the comfort, if you will, or they'll be more likely to borrow against, take a loan to do some manufacturing, to buy more inventory, to expand on their businesses. Because right now, people are touching the brake for sure, and have been for 2 years now at least. So they can't justify the cost of money and take the risk, given the economy seems to be kind of slowing down. So that's kind of where I see the rates. We have to look at it beyond housing. So there's some real advantage to rates coming down. But of course, Canada is all about housing, sadly.
I think, Patrick, I agree with you. Listen, rates coming down is going to add a certain amount of confidence to the market. But I think beyond rate cuts, what we need is stability in the market. And we need these current narratives to play through, and so on and so forth. There's just a lot of fear in the market. That's my experience right now is not that people can't go get the money. A lot of people have the money. And what I mean by that is like the renovation projects that I do for people. Right now at Vistra, we have like 33 active renovation projects and like 45 in the pipeline. So like we are busy. We've hired 17 people in the last 2 months. I mean, it is crazy busy. But the people I'm talking to that are touching the brakes and they're saying, no, not right now. It's not because they don't have the money. It's not because they don't have access to the money. They have access to money and they can go get the money, but they're scared. They're scared of Trump. They're scared of the tariffs. They're scared of the mainstream media. They're scared of the wars. They're just scared of all the things because they're being bombarded with all these messages. Somehow that is what's got to quiet down more than rates coming down. If I had a magic pill to be able to solve that, I would rather solve that than bring the rates down. Now, I don't, but if I did, that's what I would do.
Well, let's look at there's a chart there that shows the difference between what Canada is doing economically and what the US is doing based on manufacturing. And look what's happened to Canada over the past 10 years. This is the fundamental freaking breakdown of this country that drives me nuts. We have built an economy on real estate and on consumerism. Consumerism driven by immigration. We have done virtually no R&D. We have throttled way back on manufacturing. So, even right now. Carney saying, we got to get this housing handled. Okay, great. If you looked after getting the economy going on something besides housing, we wouldn't have the housing issue that we have. It's so ridiculous, the thought process or lack of thought process. We need people working. We need business. We need capitalism. We need small business. Yeah, we need corporate business. What we need less of is government and less focus on an economy that's driven by housing. And I mean, that's what Canada's become known for. And when you start to see those numbers, that chart, JG, it really is shining a light on the fact that money is leaving Canada. They don't want to keep their money here, because if you've got an economy driven by housing, and housing is in some way, shape, or form arguably melting down in the biggest economies, primarily Ontario, then you're not going to keep your capital here. You're going to move your money out of the country. And I'm talking about corporations and people with big money that would maybe invest in Canada. What are you going to invest in right now? So it's all to say that we have to look at this economy beyond housing and consumerism, and we just start to see how bad it is. And that's why it's easy to look into the future and go, yeah, some people believe we're not in a recession. Others go, we're absolutely in a recession. I guess it depends if you've got a job or if you don't have a job. I mean, if you don't have a job and you can't find a job and you're part of the cohort that's taken 27 weeks to try and find a job, yeah, things are not looking good into the future economically right now.
Now, Patrick, you switch gears for a sec. Let's talk about real estate specific, housing market numbers specifically. You have a chart here, rentals under construction as a share of total rental stock. And one thing that's pretty shocking, not shocking, but kind of shows up for me in this chart is really BC, Alberta, the bulk of the Western Canada is where there's so much of this kind of. My question is that where the overbuilding situation is going to be? Because as you can see, BC is in the lead here. This is as of May 2025, so a couple months ago. But BC, 15% of the rental stock right now is under construction. So that means there's going to be a ton coming on the market, and that means it's got to be absorbed very, very quickly, which means if there's a lot of immigration or in-migration, that can happen. But without it, it could sit on the market. Is that? Am I reading this chart the way you would read it? I'm seeing this, and yeah, go ahead.
Yeah, well, it's a percentage of their provincial building, right? So it's a percentage of the overall overarching kind of rental housing stock. So here's the thing about it. Both BC and Alberta have had over the years a propensity to draw the most immigration or be a big source of immigration moving into that province. Alberta continues to be that way. That's what I'm saying. So Alberta, as much as it feels like overbuild right now, and even as you look into the future, there's a risk of it. The absorption, which I said earlier on, it's going to take some time for the rental stock to be absorbed, given the immigration coming into provincial and direct immigration. So then that's the Alberta side of it. But economically, Alberta's remaining quite strong. BC, on the other hand, and I can't help it, it's NDP government. We're running another bigger deficit. We're going more into debt. The economy is, in fact, slowing down. So there is a very strong chance of certain parts of British Columbia overbuilding. And I'm talking primarily Vancouver and Lower Mainland. Like right now, Kelowna is pretty great as an example. So there are pockets within British Columbia that aren't at the same effect, but that's kind of what's going on in that. So purpose-built rentals is right now BC and Alberta are the highest in terms of percentage, but they also historically have the highest immigration.
Interesting, Patrick. We'll see how that, we've been tracking this one for a while, and we're going to keep tracking it and see how it goes. One last kind of number I wanted to discuss before we get into the YouTube comments, and that's becoming my favorite part of the show is the YouTube comments. So I'm excited for that. But I've been saying on this show and to you privately, but definitely on this show, I've been saying, right now it is the toughest it's ever been to go find money for great projects. If the banks are tightening up, B lenders are tightening up, everybody is tightening up. It is a lot of work to get these deals done. I'm getting them done, but it's a lot of work. It's more work than it's ever been before. And when I saw this chart about bank loans and this kind of crazy vertical hockey stick, it's like, it looks like a year ago or so, roughly, the number of billions of dollars that the banks had outstanding in real estate shot up. I mean, we're talking, from 30 billion to 80 billion, which this kind of, when I saw this chart, I thought to myself, oh, this is why they're being so damn restrictive, is they've tripled their balance sheet in the real estate world in less than a year. It's never been that high, not even close. They typically have been operating in the 10, 15, 20 billion range. They brought it up to 30 billion, and then they went from 30 to 80 billion. Like, holy crap. So am I reading this right, Patrick?
100%. And it's continuing to climb. This is the fundamental kind of, we got to pay attention to this. And so let's go back to when you even pointed out, like when did they really crank it up? And it coincides directly with the meltdown of the condo market, pre-built construction being shut down, or pre-built construction sales being shut down. Developers have to pivot. So number one, they had to go in, they're trying to carry, they're doing bridge financing. I mean, it's so complex and so much going on. They're also pivoting into that multifamily space. They got to keep people working. They got to continue to pay the bills. They're figuring out ways to pivot around this issue called condo pre-sales have dried up. So in behind all this, JG, is that that's not the only part of this. So they got multifamily space, you got CMHC lending money. There's such a huge risk in their books. And this is where it gets a little crazy, because CMHC, okay, so the government backs the CMHC loans, right? So we realize that they're lending a lot of money out, but now those loan to value ratios have totally shifted. So they're arguably underwater. I think it was you that we talked about where they're actually, CMHC is saying, no, you need more money in on this deal because of the way the values have shifted and changed, dropped. So there's just a lot of risk in the market right now. That's definitely a concern. But where are developers going to go? I mean, many have shut the doors. Like it's not being talked about a lot in the general public, in the industry itself. People know there's some big developers that have either close their doors. There's a lot of developers who have some cash who are just shutting down projects, and they've got the cash to do that and kind of weather this next storm. But these are all the things that are going on in behind the scene. There's a lot of banking risk there. Government, of course, as if somebody forecloses on, or somebody shuts down, or what's the term? So they build a project, CMHC financing, they default on that. Who's paying for that, JG?
CMHC insurance.
Yeah,
that's what it's for.
The people. So, we're paying for that. So these are all the risks that are in the market right now. And this is go back to what I said earlier, where we've had a whole economy built on housing and housing construction and housing sales. And now that that's slowing, this risk, by the way, is not really being talked about. So you got a high risk of overbuild, and that won't show up for at least a couple of years before that even shows up. And in the meantime, we're starting to see the risk that CMHC is taking on and how they're trying to mitigate that risk. And again, to your point, it's why they're making it so difficult. But when you have an economy where liquidity starts to dry up, guess what? It's a self-fulfilling prophecy. Then we definitely continue to spiral down.
I have some questions on this chart though, Patrick, and I know it's not your chart, so you probably can't answer these, but let's just take condo development, or any development for a sec, but let's just take condo development where, essentially the developer pre-sells a certain number of units, gets a construction loan, does, the construction, and then sells the rest of the units. When the developer sells the units, the people buying the units are not buying it with cash. A portion of cash, but most of them are financing that, 80% LTV, loan to value, 75% loan to value, so on and so forth. So my point is that the bank is always holding that real estate one way or the other. They either hold it for the developer, and then when it transfers hands to the owner, it may not be the same bank, but the bank in general, let's just say the lending industry, ends up owning most of that condo anyways until the mortgages gets paid down. My question is that how could triple the debt, almost, it's not quite triple, but almost triple the debt, get created? Because the bank is holding the mortgage for the developer or the consumer. And if the consumer's not buying it, that's okay. They're still holding it for the thing. But how did triple the debt get created? So I'm kind of curious on this chart. I'd like to dig into this one a little bit because it doesn't make that much sense to me. I'm a little confused by it.
Well, so you got developers who couldn't finish projects, who couldn't sell out projects, but have to carry it. So they're taking on more debt in order to carry this while they try and figure out how to sell stuff and or rent stuff. So that's part of it. Some developers have then moved into the multifamily space, which is what these loans are also accommodating. So there's a lot of it isn't any one thing, it's a number of things that are going into this particular chart. But I want to point out something here too, JG, is that the blanket appraisals are still happening. So in other words, what the banks are doing is saying, it appraised for $1 million 2 years ago. We're going to carry that appraisal forward so that these individuals can, in fact, get financing. Because if you bought that unit and you agreed to pay $1 million for it, and today it's only appraising at $750,000, that's a big shortfall. So what happens in that case is that the bank is so in that case, so the bank is still appraising it at $1 million. They're still giving you the money, but they're individuals. So in other words, let's say they lent, let's say there's 500 individuals in that building that they've given that blanket appraisal to. They finance those loans. Most of those individuals will do everything they can to pay that mortgage. You follow? If they don't do that blanket appraisal, it all lands on the developer. So in other words, the developer has to go after the end user and try and collect money. In the meantime, how are they going to carry it? So CMHC, I think, looks at it and goes, we're going to spread our risk. We're going to spread our risk to 500 individuals in this example, as opposed to one developer. Because if one developer goes south, the whole building goes south. If, let's say, 200 of the 500 individual owners go south, then at least they've still captured something. You follow my thought process on that?
Yeah, I think that's a fair assumption on your part. And I, you've always said this, and I think it's 100% right. The average individual is gonna, go to hell and back to pay their mortgage, and they will not default on that very lightly. And that's why Canada's default rate's actually very, very, very low. Even by this point, Patrick, it was only 18 months ago. Everyone was saying default rates would be through the roof in 2024, through the roof in 2025. And now we push that back, and now people are saying, 2026 is going to happen, 2027 is going to happen. But at the end of the day, people do their absolute darndest to pay their mortgage. And banks have these little tools and these little tricks in order to make sure people don't default on those mortgages, because the bank doesn't want these damn real estate properties. They're not in the real estate business. They're in the debt business.
That's right. But they're mitigating risk. That's ultimately what they're doing. They're mitigating risk. They're spreading that risk rather than one developer who will take it all out versus, a bunch of individuals. I think that's part of how they're looking at the risk mitigation side of it. And that's what we got to do. I want to go back, and I know we're jumping around a little bit, but I do want to go back to talking about interest rates and the drop of interest rates. One of the arguments that probably a reasonable argument for a 50-point basis cut is our government debt and our government deficit, which they're borrowing to pay. So in other words, they're borrowing, from one credit card to pay another credit card, both of which are, maxed out. And so part of the, pressure that I'm sure the Bank of Canada is feeling, although they say they don't, I don't know, I don't agree with that. I think they're stretching the truth there, is think about the debt that Canada and any government, this is a global phenomena. Think about the debt that we as a country have, the deficits we're operating in. So no surprise that our federal government's not going to deliver a budget. All to say this is that is in fact an issue. Canada went to, to service the debt is now 30% of our GDP goes to service our debt. And that's up from like 22%. So it doesn't seem like, 8%, it's a big number. I mean, the US is right off the charts. Yeah, huge number. So Canada fiscally is appearing more responsible, but we also have an economy that is like minuscule.
Yeah, 100%. Now let's get some YouTube comments, Patrick, because this is becoming my favorite part of the show. Got some great comments, by the way, folks. Please, more comments below. We love the comments. We respond to them. We talk about them on the show. Patrick, Mr. D4295 says, as Carney and the Liberals run massive out of control deficits, they will have to sell that's a technical term, boatloads of bonds to float the deficit. Unfortunately, to sell large amounts of bonds, there needs to be an incentive for buyers of bonds. So expect interest rates to stay elevated. Thoughts on this, Patrick?
Well, that's a really good point. You can't argue that point. There's a very good chance that that's what's going to happen. Now, they haven't yet. There's kind of high twos. I've bumped 3 a couple times this year. So when you look at interest rates discussions, if you're just trying to decide on variable versus fixed, I'll tell you right now, if you're going to take a variable rate, you better be paying attention to what's going on a daily basis. You have to be fully engaged. And if you're not that person, you're better to take a fixed rate. And right now, I think homeowners, a home buyer, can probably get like 3.99 as a rate on a fixed rate. Investors, if it's an investment property, you're probably more in that 4.25%, 4.5%. I don't know what you're getting these days for quotes, JG, but you start to understand that when you look at what's kind of going on in the interest rate world, bond yields are going to play. They play the big part in it, right, with fixed rates.
Yeah, 100%, Patrick. Now, if we do get, but we expect that by the time this show airs, rates are going to be down. Variable rates going to be down a quarter point up to maybe half a point. What do you think that does for the bonds? Because the bonds have been coming down here. 5-year bond in Canada is down to 2.66. It's down from like 3.14 not too long ago, Patrick. Like you and I just talked about this 2 weeks ago, and it was there.
Yeah, I don't have an answer to that question. I mean, there's different views of the world in terms of some say that this, the Bank of Canada rate will affect bond yields. I don't know that that's the case. It's just a different world, and I don't really have a comment on it today. I'm just looking at the uncertainty of what's going on globally, and people are going to seek safety, but they're going to want a higher yield to go into a bond. So I still expect fixed rates to go up.
At 1AG18 says, love calling out facts. Canada is an economy driven by housing and consumer spending, driven by massive immigration. Oh, and public sector jobs funded by its population and massive deficits. Patrick, I think this is your favorite fan right here. I think this is your number one fan right here.
There you go, right there. See?
Another one is Fast Eddie 617. He says silver now. Patrick, that's becoming more and more precious metals. I have a friend of mine who's huge into precious metals, and it's funny. He was telling me how his silver is up from, I forget how much, but he's got to be up like 50-60% in the last couple of years. It's done very well for him. Definitely, he's done great.
Yeah, for sure. But this speaks to a couple of things. I mean, silver is not a little bit. It's a lot different than gold, but they're both monetary metals. But industrial, silver has an industrial use. So shortages, if you follow that kind of precious metal world, gold is kind of, for me, is the economic indicator. And gold right now is well over $5,000 Canadian, $3,700 US. It's hitting record levels. And the reason that's meaningful, and we've shared it on the show before, is simply because people are seeking safety and they're uncertain about what's going on in the market. They're not okay with what's going on in the bond market. They don't know what to do in terms of real estate. So and equity market is, all-time highs. Everybody's calling for a crash. I mean, it really is an uncertain time. So where do they go? They go to gold. And by the way, JG, politically, so it's important to understand on a gold conversation that central banks globally have been loading up for the past 3 to 5 years, 3 years particularly, but a 5-year window. Record amounts of gold just quietly, they're stacking. And so when we look at that, it's more an indication of the uncertainty of what's going on in the world, global macro. The uncertainty of wars and disruption and U.S. reserve currency or not, the devaluation of fiat currency. So those are the indications. These are things that we're paying attention to, but it's not affecting anybody today. That's the thing. This gold, by the way, you see gold prices going up. None of that's really retail investors, by the way. You got a friend, I do some stuff, but ultimately this is all central banks driving that.
I'm just looking at my digital gold right now called Bitcoin. I'm just looking at it here. Just looking at it. So
Yeah. There you go.
Bitcoin's done all right as well, Patrick. That's always interesting. And then we have another comment. We got such great comments, Patrick. Everyone's leaving great comments. You and I were chatting off air a while ago how we love the comments and the banter and the authentic comments that people are leaving. So thank you so much, ladies and gentlemen. And people have a variety of views, Patrick, and that's great. And it's not about who's right and who's wrong, but it's great to be able to have the conversation and share the views.
Yeah, 100%. Come in and create some community, create some great conversations. And even some of those comments, they really force us to kind of look, think, see a different perspective, because perspective is everything. Change your perspective, change your perception. That's it. So it's good to get other perspectives so that you can dissect what it could be.
At the end of the day, my belief, Patrick, is we're entering, there's a state change happening. We're going from an older world to a newer world, and this kind of confusion and this kind of chaos that everyone is feeling, frankly, I think everyone feels it and experiences it a little differently, but everybody feels it. Some people, have a different experience of it, but people are feeling it, and we're just at the beginning of this. I mean, this is going to be going on for quite a while. This is the beginning of the state change, and I think I see this going on for many, many years. So I guess my point to people is you gotta do your best to make sense of it for yourself. And we've recommended great books in the past, and shows like this hopefully help you. But you got to make sense of it, because don't think, oh, this is going to be over in a couple months. I mean, my opinion is that this is going to go on for many, many years. You're going to early 2030s until this all gets sorted, in my opinion. So there's many years ahead. So if you're in a state of panic all the time, that's not good for you. So you want to make sure that you have an understanding of it so that you can move through this phase and not be stopped by it. That's what I'm trying to say, Patrick.
No, that's a good point. You got to stay engaged, stay informed, create your thesis, kind of then put a plan together. The last thing you want to do is disengage, pretend it isn't going on, curl up in your basement in the fetal position and ignore it all. That will get you in trouble, guaranteed. So stay engaged, stay informed, start to create a plan for how you see yourself going forward in the next couple of years.
Awesome. Great show, Patrick. Thanks for doing it. And looking forward to the next edition of Rein It In.
If you enjoyed this episode and you want to hear more of what JG and I have got, check out our last episode. It was epic.